Hello traders and welcome to the Evening Strategies video series. In this video, we're going to go ahead and talk about the Bund Futures FGBL Surfer strategy. Let's go through the market vitals of this market, and if you haven't watched the detailed video of this market, then please go ahead and watch that before you go ahead and go into the strategy, just so you have a better understanding of what you're getting into. The market name is the 10-year German bond futures. The exchange is on the Eurex exchange. The ticker symbol is FGBL. The roll cycle is quarterly, but if you'd like some more information, go ahead and click on the link located on this page. The tick value is 10 euros per tick. The cash session is from 3 a.m. Eastern Time to 11 a.m. Eastern Time. That is dependent on daylight savings time. There's a couple times during the year where it might be off by a couple of weeks. The extended session, again dependent on daylight savings time, is from 2 a.m. Eastern Time to 4 p.m. Eastern Time. So it is tradable during this extended session, but we're going to actually focus right there on that cash session. The important recurring events that can affect this market are geopolitics, global economy, inflation, and interest rates. As a reminder, trading does carry significant risk, and all information in this video is provided for educational purposes only and does not offer or recommendation to trade futures, stocks, options, or Forex. Let's go and give you an overview of this FGBL strategy. First of all, it trades the Euro Bund futures contract FGBL. Now, it trades in a customized German cash session open and close template. And what that means, and I'll show you here in just a few moments, is that you're going to have to create a new trading hours template, which is really easy to do. I'll walk you through step by step again in a couple of moments, but you're going to get set up a customized template and a customized chart to go ahead and trade this strategy. This trades both long and short. You can trade this any day of the week, Monday through Friday. And the trade time is going to again be between 3 a.m. Eastern Time to 11 a.m. Eastern Time. So if you are in the Eastern Time zone, you're going to have to get up quite early to go ahead and execute this trade. But it'll be very easy to manage. Once that market opens, you can pretty much wake up, set the trade, and then go right back to bed if you wanted to. So it'll be really easy, really simple, really straightforward. So what I want to go ahead and show you before we get into the strategy is just the overview of the strategy real quick. It's kind of a high-level overview. We'll get into the details here in just a second. But you're going to be using an 8-hour chart. And you can see there's no indicators. There's really nothing here on the chart. Very simple. You're going to pretty much look for a 2-bar setup to go ahead and execute a long or a short trade. Now I want to go ahead and transition into that template that we were talking about. All right, so we're on an 8-hour chart, or 480-minute chart, as you can see. And want to go ahead and set up the correct template here into the chart. And it's very easy to go ahead and do. You want to go to Tools, go to Trading Hours. What you're going to go ahead and do is click Add on the bottom here. You're going to name this one FGBL, or you can name it whatever you like. The time zone is set to Eastern Time, so you can set this accordingly to you. You want to, again, this correlate with the German cash open and the close. So we're going to go ahead and use Eastern Time here. And then what you're going to go ahead and do is go through each day. Oh, go ahead and put 1 here because I already have this set up. I'm going to go ahead and put just 1, but for you, just go ahead and just keep FGBL. So what you want to go ahead and do is add each day here, Monday, 3 a.m. Eastern Time, and the end of the day would be 11 a.m. Eastern Time. Make sure this box is checked. Go ahead and hit OK. So now you can see the start day is Monday, start time is 3 a.m. The end of the day is at 11 a.m. on Monday. And what you're going to go ahead and do is do this for the same thing for Tuesday. Again, 3 a.m. Close this on Tuesday here at 11. Hit end of day. And there you go. So you can see you're just going to copy that and keep on doing that. So for Wednesday, Thursday, and Friday, go ahead and set that up here in the template. And once you're done, go ahead and hit OK. You'll go ahead and save it to the template, and you're all set. Now, once you go ahead and set up those trading hours template, you hit OK there. Let's go ahead and go back to the chart. I have a 480-minute time frame loaded here, and it's very easy to do. Just go ahead and hit 480 M here, and that'll give you a 480-minute time frame. Let's go into the data series here real quick. I have 600 days loaded back. You want to, at least you want to see, 300 days here. So I just put 600. You can actually have less than that because just this for the strategy is just going to be a 2-bar strategy, so you really don't have to look back too far. So that's up to you. So I have 600 days loaded here. Now the trading hours is where you're going to go ahead and put your template in. So you're going to click on this, and you can see there's a lot of different templates here. You can go ahead and go down to FGBL and just hit OK, and that'll go ahead and load your template on. So now each bar here is an 8-hour bar, and it has that time, the 3 a.m. to 11 a.m. So if you want to look at this, each bar here is a day or a session. Now with that said, let's go ahead and get back to the strategy now. So we already did the first step. You want to open up a 480-minute FGBL chart with the customized trading hours template loaded, and now you know how to do that. You want to watch for 2 consecutive green bars or red bars to go long for green or short for red. Now, if you have 2 consecutive green bars, once you have those 2 consecutive green bars, execute a long trade at the market at the open of the next bar. So remember, each one of those bars is its own session. It's a cash session. So as soon as you get 2 consecutive green bars, on that third bar, as soon as that bar opens, go ahead and go long. If you have 2 red bars, on the third bar that opens, go ahead and go short. All right, so those are your that's your reference bars, the 2 green bars or the 2 red bars. As soon as you have those consecutively together, either 2 green or 2 red, then you go ahead and go long for green or go short for red on that third bar. Same thing for a short. Once you have 2 consecutive red bars, execute a short trade at the market at the open of the next bar. We don't recommend putting a limit order in the market. Just go ahead. As soon as that bar opens, go ahead and go short or go ahead and go long. Now the stop is going to be at the most recent swing high for a short or the most recent swing low for a long. The target is simply going to be 2 times your risk. So wherever your risk is, you want to at least get 2 times your risk. So that's 2 to 1 risk reward ratio. So let's go ahead and take a look at a trade setup, and as you can see here, pretty simple, pretty straightforward. You set up the chart here, make sure you get that trading hours template set, and you can see right here we had 2 consecutive green bars here. So on this third bar here, that is where we go ahead and go long. Okay. Now on this trade here, you actually would have gotten short here, but just to give you an example, you'd been short, probably would have been stopped out on this one. But just to show you an example here, once you get these 2 green bars here, you go ahead and go long on the open of the third bar, put your stop below the low here, that's the most recent swing low, and you're looking at 2 times risk here, so 2R, and you see that it nailed the target here. Now there are going to be times where you can get a runner, so you can go ahead and take a contract off here and go ahead and let a runner go. Now you don't want to go ahead and close the trade and then wait for 2 consecutive bars and reopen a trade here, and then close the trade and then open it again. The idea here is that if you get this long and if you have that runner, go ahead and manage that stop. As soon as take a position off here, or take a half a position off here, and then move your stop higher to break even here. You can see you have a beautiful uptrend here in this market, and it's kind of you don't want to go ahead and get out prematurely. You want to squeeze as many ticks out of this market as you can. So again, use a little discretion there. I would go ahead and as soon as I take half a position off, go ahead and move my stop to break even here, and then try to manage the stop. As soon as the market goes higher, move the stop underneath here. You see the market moving higher. At this point, I'll probably go ahead and stop out somewhere in here, but I was able to squeeze out some more ticks out of this market. So use your discretion here when you're trying to get that runner and trying to get that runner, squeezing as many ticks out of the market. But the strategy is pretty simple and straightforward. 2 green bars in this case, go long on the open of the third bar. Risk is to the low, and the target is 2 times your risk. Same thing for the short side here. Don't have a good example here, but for instance, right before that, you had 2 consecutive red bars. You would go ahead and go short right here. Your stop would be above here. The target would have been somewhere down here, but as you can see, you would have been stopped out here on this trade. But pretty simple and pretty straightforward. Now let's go ahead and transfer into the charts, and we'll go ahead and go through this step by step. So, one thing to note is if you have a strong trend like this, you want to be a little bit cautious of taking those short trades here. As you can see here, this is an example that we just talked about. But as far as long trades go, there's plenty to go ahead and take advantage of here in this market and get some pretty good runners as well. So let's go and back up here. We talked about a long trade. Well, let's talk about a short trade. So let's go ahead and take a look at this trade here. So you can see that we have 2 consecutive red bars here. So we're going to go ahead and look for a possible short trade. Now we wait again. We have the 2 consecutive red bars, and we have a third bar that we go ahead and right there at the open, we go ahead and go short. All right, so we're short right through here. Oh, a little bit higher than that. Our risk is going to have to go above the most recent swing high, and you can just put just a tick above that swing high right there. Go ahead and just do it above that little high there. So for this trade here, we're going to be risking to about $1.93 there. So we're going to look for almost $4 here. All right, and that would take us all the way down here towards the bottom here. All right, and there you go. We have a 2-to-1 risk reward trade, and you can see that you have the 2 consecutive red bars. All right, on the third bar, you go ahead and go short. You can see it took a little bit of drawdown here, kind of hanging around the entry here for quite a bit, and then started to move off here pretty aggressively, and it's a massive, pretty good trade here, pretty massive trade to go ahead and take advantage of. Almost nailed this low here before actually turning around. Now, as far as where to go ahead and get short here in this market, you could have gotten short. When you see these 2 consecutive red bars right here, could certainly have gotten short right through here, and then put your stop up here. Again, just right above the tick there, that tick of the high there, and then your 2-to-1 probably would have been somewhere in this area here, and would have covered that trade. So quite possible that you could have been short here a little bit more prematurely. And because you have the 2 consecutive red bars, put the stop up here, enter at the open, which should actually be right there, so tighten up risk even better. And then again, 2-to-1 risk reward probably would have been somewhere closer to this. And in this case here, your risk reward here would have been pretty ideal, because if you were able to hold on to that runner, instead of getting short down here, we're short way up here, and this trade would have netted you well more than probably even 10R here at this point, or 8R. If you're looking at this trade, so 8 times your risk. So another good trade here. And again, once you have a trade like this and you have that runner, you don't want to go ahead and keep getting short. So for instance, you cover the strategy here. You don't want to go ahead and get short here. You see 2 red bars here. Go ahead and get short here at the open. Now this one would have worked, but ideally when you have a good run like this, you want to go ahead and try and squeeze as much out of it as you can. You don't want to go ahead and exit the trade, then re-enter the trade, exit the trade, then re-enter the trade. You want to squeeze as much out of that existing trade as you can. Once you come down here and you get towards the bottom, you have a couple of consecutive green bars here. Once again, go ahead and go long. All right, stop right below, just a tick below the low here. All right, so we're risking 0.84 here. So we need about $1.68, I believe. All right, and there you go. So you have, this is what your risk is right here. You see 2 consecutive green bars here, and you want to go ahead and go long at the open, actually a little bit higher than that, at the open of that next bar here. So move this just a touch. All right, so you go long here at the open of that next bar here, and you get those 2 consecutive green bars here, stop right below the low, and then bam, you nailed it. Again, take a contract off here and have a runner, and you could squeeze out a lot more ticks here in this market. We can go over and over this again here. Let's go ahead and take a look at another trade. Let's say you missed that, and you have 2 consecutive green bars here. You go ahead and get open on that third bar. Doesn't matter that it's a red bar. You want to put your stop below that swing low there, just a tick below the swing low there. And again, risking about, let's see, 112 there. So let's go ahead and look at about 224. All right, there we go. And there you go. So you can see this one worked out here as well. Had a runner, could squeeze out a little bit more here in this trade. It doesn't matter where you get started here when you're using this strategy. So, if you're in the middle of a move, let's go ahead and go back to the very end here. All right, so we currently have printing 2 consecutive green bars here. So on the next session here, we're going to go ahead and go long, wherever this bar opens here, put the stop right below the swing low. And matter of fact, go ahead and put it down here. And then the target is going to be 111, so we want 222 here. All right, so right about there. So our next trade here is going to be, long right there, around 171.50, wherever the market goes ahead and opens. And you can see exactly where our target's going to be. and where our stop is going to be. It doesn't matter where it is on the chart, where you start with the strategy. It doesn't have to be at the bottom, or you're not looking for a specific pullback point or anything like that. You just, if you start here in the middle and you see 2 consecutive green bars here, and even though you missed all this move, let's go ahead and take a look at this trade here. So, let's say you got into the market, you see 2 consecutive green bars here. You're going to go ahead and go open at market at the right here at the open of this bar here. Risk going to be just below that low. Again, just a tick below that low here. Risking about 110 there. Let's go ahead and see. So we need 220. Should be right about there. All right, there you go. And you can see this one nailed it. Got to your target. It was in profit. Got real close to the target. Had a little bit of drawdown before it finally nailed your target. Again, take a contract off and you have a nice little runner here. So again, it doesn't matter where you start here in the strategy, whether it's short or long. Now there will be times that you'll get stopped out here. And just to show you this trade, so let's say you had 2 consecutive red bars here. I'm going to go ahead and got short there. And for this one here, it's 92 or 90 here, so we need about $1.80. All right, that brings us about here. And obviously you would have got stopped out here on this one because this would have been our initial target. But you have a beautiful uptrend here, and you want to go ahead and get on that trend here and look for more long trades here if you can versus short trades. But again, a very simple, very straightforward strategy. You can see we got stopped out here on this one. You will see that from time to time. But if you see a beautifully trending market as you see this one here, this will work time and time again. So very simple, very straightforward. Don't overcomplicate it with indicators or anything like that. Just take it for what it is. Make sure you put a 480-minute time frame on there. Use that trading hour template that we set up, that FGBL one, and look for those 2 consecutive bars, and that's pretty much it. Thanks for watching this video. Hope you found it helpful, and happy trading.